Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are analyzing two articles, to where the first one is titled, Cathie Wood's Ark Invest is selling Nvidia stock and buying these two artificial intelligence AI growth stocks ahead of 2024. And clearly, Cathie Wood is selling Nvidia stock and buying Palantir Technologies PLTR stock, as well as one other artificial intelligence AI growth stock. So stay tuned if you want to know what that stock is. And then the next article is titled 3 no-brainer stocks to buy for less than $100. And one of these stocks is Palantir Technologies, which we're going to skip because we're going to be talking about Palantir in the first article. Also, a quick update. If you didn't know, my dad has cancer and I've been taking care of him through this very grueling process, and my heart goes out to all of those whose family has had to experience cancer, or if you've received any detriment from this terrible disease. So if there are artificial intelligence videos that I've been posting, it's because I don't have time to commentate various videos, so then I'm faced with the choice of should I not upload at all or at least upload an artificial intelligence video. So if you click on one of my videos and it's an artificial intelligence video, don't worry, I am still going to be commentating my videos whenever I can, but I want my dad to rest as much as possible, and I don't want to wake him up or disturb him by commentating because I want to take care of him as best that I can. Also, another thing to look forward to, because we are now in 2024, is that I will be posting regular updates, probably every 2 weeks or even maybe every month, about a portfolio that I am building, which we have already increased from $2,000 up to around $100,000, and we're just going to keep the momentum going. So if you are excited for that video series, go ahead and annihilate that like button right now, comment your thoughts down below about Palantir Technologies, and of course, don't forget to subscribe and become a member of this channel, because that's what keeps me here on YouTube. With all of that being said, thank you so much for your support, and let's get right into the video. Cathie Wood of Ark Invest is a very prominent investor celebrity as well as stock analyst, and she manages a plethora of various stocks in her high-performing technology-focused ETFs, where she tries to identify disruptive technologies like artificial intelligence stocks, which will absolutely explode in their overall share price. So far, her Ark Innovation ETF is already up 73% year to date, which has beat both the S&P 500 as well as the NASDAQ composite, meaning that if you are invested into Cathie Wood of Ark Invest's Ark Innovation ETF, you are already outperforming the general stock market, even though over the last few years, Ark Invest has had a very bumpy ride in regards to their overall stock returns. Now, the reason why Cathie Wood of Ark Invest is in this video is that they have been selling off Nvidia stock, which is quite surprising. They have unloaded approximately 33,900 shares since September. And the reason why this is interesting is that Nvidia stock has been a powerhouse performer that has more than tripled during the year of 2023. But Ark thinks that they have reached a top, so they have sold off some of their shares of Nvidia to rebalance their overall portfolio in ETFs. And they are taking some of the profit which they have gotten from Nvidia, and they have used that to invest into Palantir Technologies as well as the trade desk, which is what we're going to talk about in this article. Palantir Technologies PLTR stock currently trades for $17.17 per share, while very bearish analysts believe it could fall to as low as $5 over the next 12 months, while a bullish prominent 5-star analysts believe it could surge up to $25. So clearly, this is up for your interpretation, while the average price target comes in at around $15. And for me, I think if you can snag shares below $15, that would be an ideal buying opportunity, because we've already seen so much success in this overall share price for this stock over the last few months. So now let's talk about what Palantir does and where we can see this company's share price in the future. Palantir Technologies is a big data and analytics company which serves both commercial enterprises as well as government clients. And essentially, they interpret loads of data to inform a company's management so that they can make data-driven decisions. The company is also very heavily involved in artificial intelligence, and they also are trying to optimize machine learning models. In fact, they are so integrated and so far ahead of the competition in regards to machine learning as well as artificial intelligence that the company was recently recognized as a leader in model ops and artificial intelligence and machine learning platforms by an independent research group, and multiple multiple independent research groups have put Palantir above other companies such as Microsoft as well as Google, which is absolutely insane. So clearly Palantir looks like a strong investment opportunity as long as we get this company at a cheap share price. On top of that, they've also changed their go-to-market strategy, which has been driving their overall sales upwards. And this is thanks to their artificial intelligence platform and their boot camps, where they can actually sit down with various companies and engineers and teach them how to properly use Palantir's various platforms and technology. This has led to a customer count increase of around 34% to 453 customers. This also caused their revenue to increase by approximately 17% up to $558 million in the third quarter. You should also know that Palantir has been profitable on a generally accepted accounting principles basis, also known as a GAAP basis, for the last 4 consecutive quarters, which makes this company very stable and resilient. On top of that, this also allows them to potentially be included in the S&P 500, which I think they will end up joining, and once this happens, their share price could absolutely explode. On top of that, we get even more great news from their chief revenue officer named Ryan Taylor, who spoke very optimistically about this company and their future potential, where he says, and I quote, "The potential market for AIP, which is Palantir's artificial intelligence platform, is massive." And a Morningstar analyst even commented on this exact quote to where they agree. Palantir's overall market opportunity is massive, and that's why professionals believe Palantir could scale their sales and revenue by approximately 26% annually over the next 5 years. And considering that they're only trading at 18.3 times their sales right now, this growth rate is high enough to offset this premium of 18.3, making right now a decent buying opportunity. For me, Palantir currently makes up 3% of my overall portfolio, and I can't wait to see what this company makes of themselves in the future. So for investors who want to add a small portion of Palantir to their portfolio, go ahead and do that, because I wouldn't recommend more than a 5% initial portfolio allocation for this company, meaning that if your overall portfolio is worth $100,000, you would not invest more than a $5,000 allocation to this company, either all at once or even over a span of multiple weeks, months, or years. But overall, Palantir is a strong artificial intelligence stock, and it's cool to see how Cathie Wood of Ark Invest is selling a phenomenal stock like Nvidia, and she is using her profits from Nvidia to buy companies like Palantir. So I can't wait to see where this company goes in the future. Next up, let's talk about the trade desk, ticker symbol TTD, which currently trades for $71.96 per share, while analysts believe this company could fall to around $30 per share, and clearly that would be the more bearish negative critical end of various analysts who are covering this company, while on the other hand, very bullish analysts believe the company could surge up to $100 per share. We also see that they have a median price target of $76, which is a conglomeration and a median price target of a plethora of various analysts' price targets, but the majority of analysts actually say that investors should buy this company as of right now. And this makes sense because their current share price is below the median share price of around $76. So let's talk about what this company does. The trade desk essentially allows companies to manage their ad campaigns and their marketing campaigns across multiple digital channels, giving them very important data that these companies need to know so they can end up marketing to the correct demographics. We also know that a company named Consultancy Quadrant Knowledge Solutions recently claimed that the trade desk is the best ad tech platform on the market in terms of both technological excellence and customer impact. So clearly, this is one of the leading companies over in the ad space, which directly competes with peers like Alphabet's Google and YouTube, as well as many other heavy hitters. However, they are so impressive that Morgan Stanley believes that the trade desk will continue to capitalize on their leadership, especially in regards to the retail industry. And if you didn't know, the trade desk already does business with some of the largest US retailers, including Walmart as well as Target, to where they can provide advertisers with measurement capabilities which are unavailable on other ad tech platforms. And this is why the trade desk is a market leader in this regard. The trade desk delivers very solid performance, and they've been doing this recently, which is phenomenal news, to where their revenue grew by a 25% CAGR, bringing them in around $493 million for that quarter. But there are a few problems with this company. On the flip side, we see that a Morningstar analyst said that the trade desk could grow at a 22% compounding annual growth rate over the next 5 years. However, this growth is not enough to offset their pricey valuation of around 20.7 times their sales. Now, ideally, if their share price becomes a little cheaper, then they would be a better buying opportunity according to their current growth metrics. However, if they were ever to have a phenomenal quarter where they beat estimates, then this company would be a phenomenal buying opportunity. However, I personally would wait just a little bit before buying this company just to see how cheap we can actually get it. Unless you are a long-term investor who is prepared to hold this company for at least 5 years, then clearly this company would start making major gains in profits for your portfolio at that time. But that's not all. We also have some other companies that you need to be aware of. And we're going to be going over 2 other stocks that are no-brainer buys right now that are trading for a phenomenal price. Where the first one is none other than PayPal, which currently trades for approximately $61.41. And if you didn't know, PayPal is an absolute behemoth in the online payment services space. For trading at only $61, analysts, even on the most bearish end, believe this company is worth around $55 per share, while very bullish analysts who are positive on the company believe it could surge up to $118. But the best part to me is that the average share price for this company is $74. And considering that the current share price is trading well below $74, it makes this company an absolute steal of a buying opportunity. This company was more than double its current value less than a year ago, meaning that right now is a great time to buy into the stock at a cheap share price. If you didn't know, the digital payments industry is massive, and analysts currently project this market to be worth around $193.7 billion by 2028. And PayPal is going to capture the majority of this market. Now, they do have strict competition from companies like Apple due to Apple Pay, and various other peers in the overall industry. But nonetheless, PayPal remains as one of the top online payment options in the world today. And with their PE ratio, which is their forward price to earnings ratio, at just over 11, this makes this company very cheap compared to a stock market benchmark such as the S&P 500. So that's why I have bought more PayPal stock recently, and that's also why it's been in a lot of videos recently, because I want to keep you updated on what I personally am adding to my portfolio. Now, lastly, let's talk about the smallest stock by market cap on this list, which is CRISPR Therapeutics, ticker symbol CRSP. The market cap is barely above $5 billion, but for me, that just means that this company has a lot of growth that it can achieve in the future. CRISPR is a company that focuses on gene editing and gene therapy, which is a very revolutionary technology that a plethora of other companies are trying to get into. But in my opinion, CRISPR is the leader in this regard. Their current share price trades for $62.60, while on the low end, analysts believe it's worth only $30, while on the high end, experts believe it could surge up to $188, with the mean price target being close to $84 per share. And again, I think this is a pretty good buying opportunity. On top of that, we also had a recent catalyst where CRISPR launched a gene therapy treatment for sickle cell disease, which is named Casgevy. Now, you as an investor need to understand that they actually developed this alongside another company named Vertex Pharmaceutical. That means that Casgevy's revenue will be split between both CRISPR as well as Vertex Pharmaceuticals. However, CRISPR will be getting 40% share of the overall profits from the selling of this overall gene therapy. And although CRISPR is not profitable right now, as its top of the line continues to grow in recent years, and if you are a long-term investor that could take on the risk of this very risky growth stock, then you might as well load up on this company while it's cheap, because the future looks extremely bright. This is another company that Cathie Wood of Ark Invest also seems to like, because she has also been adding this company to her portfolio over the last many years. But I leave the investment decisions up to you. Always make sure to do your own research on any or all of these companies. I just wanted to do a quick update on the stocks that I personally am adding to my portfolio, and as always, remember to practice proper risk management. Don't overexpose yourself to any singular stock more than a 5% initial portfolio allocation, because that's proper risk management. And if you want more videos like this one, don't forget to go and annihilate that like button right now. Subscribe if you are new. Go ahead and become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. And with that being said, I wish you the best of luck and happy investing.